Zach's Know Your Options, a weekly overview of unique option strategies and ideas designed to help you beat the market no matter which direction it's going. This time around, we're pulling out that jeweler's loop to talk about intrinsic value with Kevin Matris, who is our options specialist here at Zacks.com.
Jeweler's loop.
Yeah, well, they look for intrinsic value
there you go.
in
All
jewelry,
right?
But I've heard of this before, but I'm guessing that in your case, this is another one of those options phrases.
Yeah, it's one of those options words. As you know, there's a lot of different confusing options words out there like delta or theta, in the money, out of the money, intrinsic value, extrinsic value, and I could probably just go on and on. Mm-hmm. But in these segments, what we really try to do is we try to demystify options by explaining terminology, going over different strategies and this kind of thing. And today we are going to demystify intrinsic value.
All right, well, go ahead. We'll listen to you here.
All right, well, everybody knows what intrinsic value means in regular everyday life. It means real or innate or inherent or of within. And in options, it means it means something very similar. So check this out.
Okay.
The definition of intrinsic value is this. It is the difference between the underlying stock price and the options strike price that is in the money. For example, if a stock was trading at $50 and a $45 call option with 30 days of time left on it was selling for $6.50, that option would have $5 of intrinsic value. So the way that works out, is a $50 stock price minus the $45 call option equals $5. Mm-hmm. If the option premium is worth $6.50, that means $5 of that is intrinsic value. The other $1.50 of that is extrinsic value, which is also known as time value.
What does that mean exactly? Because I have a feeling I'm going to be quizzed at the end of this.
I haven't decided if I'm going to quiz you, but check this out. Extrinsic value, which is once again also known as time value, it is the amount of the premium that is not comprised of intrinsic value. This part of the premium is said to be your time value. So out of the money options are comprised of only time value. So using that same example that we just got done looking at, if you have a $6.50 premium, minus $5 intrinsic value, mm-hmm. that means you have $1.50 of extrinsic value. So the key to remember is that options are comprised of two parts, intrinsic value and extrinsic value, which is, once again, time value.
All right, but
we cleared the whole thing up, right?
Well, it sounds like it on the surface, but what difference does that make to me if I'm thinking of trading in options?
In the very beginning, when you first buy the option, for all practical purposes, nothing. But think about it. If you bought an option, let's say for $500, and then you sold it, let's say a little bit later for $800, whether half of that was comprised of intrinsic value or a portion of that was comprised of extrinsic value, it really doesn't matter because you're buying it at one price and you're selling it at another. Where it really starts to matter is at expiration, because at expiration there's no time left. In other words, there's no extrinsic value left to your option. So your option will only be comprised of intrinsic value, and that is where it makes all of the difference. So check this out. If I had a $50 call with 2 months of time on it, and the price of the underlying stock was at $45, that option might be worth $350, which is equivalent to $350. And at that point, the premium is comprised of only time value. But now, fast forward 2 months. If that stock is still at $45, that option is $5 out of the money, meaning it has no intrinsic value. And since its expiration, right, it's now at expiration, mm-hmm. the time has run out, meaning there is no time value and it is now worth $0. If, on the other hand, the stock was at 53 at expiration, all of the time value has disappeared. But it has $3 or equivalent to $300 of intrinsic value, which means your option is worth $300 if you were to sell it. So again, at expiration, the intrinsic value is what makes all of the difference.
Sounds interesting enough and easy enough. I'm going to have to study the text version of the story. You can find that on our homepage at Zacks.com if you scroll down that homepage until you get to our options section. what you don't learn here. All information to help you know your options. With Kevin, I'm Terry Ruffalo.